banks being much more disciplined about their capital. So that's, I think, it's an umbrella for all the other changes. And I consider that with very serious implications. So serious implications regarding geographic reach, serious implications around compensation systems, and serious implication about how to deal with regulation. But I consider discipline with capital as a big shift since the Lehman crisis. I think generally the industry is moving in the direction of demanding more commitment from their senior executives. So these can be expressed in different formats. So partnership emulations, long-term vestings. So more commitment or more skin in the game, if you want, from the key executives of the organization. And another angle of that, and is spread through the different ranks, more payment around performance, even though that salaries increase, and this goes against performance. But overall, I think banks will be more disciplined about recognizing performance and paying around that. People will focus more on their core expertise, and this also means geography. So you have a lot of people doing business here in Latam, but they do business as tourists. So they come during the heydays and they leave during the crisis. Since we are an emerging market region, so these ups and downs are more frequently, and generally this is not a good business strategy. So it's just another moment of the downs, but I think this will be a longer cycle of tourists out of some of the other regions. And by the way, I think you have a lot of global players more focused on Europe, others more focused on US, others more focused on emerging markets. And I think this is quite healthy. So I do see a financial system that is less global and more focused. I would divide shadow banks in probably two different worlds. One is the healthy one that don't need to be regulated and help the markets and live by themselves, like hedge funds, that you have a simple product that is kind of self-regulated by the markets. I think this industry they have their commercial challenge, their business challenge, but I think the model worked relatively well through the financial crisis of 08 and 09. So we didn't have central banks rescuing hedge funds globally. So I think the markets are self-regulated. What I don't like is the shadow bank system more directly substituting banks. So non-financial companies promoting lending globally with no controls of leverage, of limits, of diversification. I think it's a way for the future disaster.